Imagine this, the stock market is plummeting, panic is spreading like wildfire, and investors everywhere are watching their portfolios shrink. But not you. Instead, you're watching your account balance grow. Sounds like a dream, right? This isn't some fantasy. It's exactly what happened to Alex during the 2020 market crash. How did Alex make money while everyone else was losing theirs? The answer is something called put options. In March 2020, as news of the COVID-19 pandemic gripped the world, the stock market took a nosedive. Businesses were shutting down, people were staying home, and the future looked uncertain. Most investors saw their stock values drop dramatically. But Alex, a savvy trader, saw an opportunity. He had been following the news closely and anticipated the market downturn. While others were selling off their stocks in a panic, Alex decided to try something different. Alex knew that in times of crisis, certain industries would be hit harder than others. He focused on the airline industry, predicting that travel restrictions and fear of the virus would cause airline stocks to fall sharply. Instead of selling his stocks at a loss or holding onto them with fingers crossed, Alex bought put options on several major airlines. Let's take Delta Airlines as an example. In early March, Delta's stock was trading at around $50 per share. Alex bought put options that gave him the right to sell Delta shares at $45 each, even if the market price dropped below that. As the pandemic worsened, Delta's stock price plummeted to $20 per share by the end of the month. How Alex profited. Here's where it gets interesting. Imagine you bought a ticket to a concert, and then the ticket prices drop dramatically. The concert house is selling the ticket at lower price. However, you are allowed to sell the ticket to someone at the higher price you bought them. That's similar to what Alex did with his put options. So, how did Alex profit? Let's break it down. Alex's put options. Alex had the right to sell Delta shares at $45, even though the market price had dropped to $20. This meant his options were valuable because they let him sell at a higher price than the market offered. Market conditions. With Delta's stock at $20, Alex's put options became highly sought after. Traders who wanted to benefit from the drop in stock price were willing to pay for the right to sell at $45, selling the options. Alex sold these options to other traders for $25 each. Here's the math. Alex's options allowed him to sell at $45. The market price was $20, so his options were very valuable. If Alex sold the options for $25 each, he made a $5 profit per share, the difference between the $45 strike price and the $25 option price. For 100 shares, that's a $500 profit. It's like having a winning lottery ticket, but for stocks. Market conditions and put options. What Alex did was capitalize on market conditions using put options. When the market is volatile or expected to decline, put options become a powerful tool. They allow traders to hedge against losses or even profit from a downturn. This isn't just theoretical. It's a real strategy used by investors to protect and grow their wealth in uncertain times. Historical context. This strategy isn't new. In fact, some of the most successful investors have used put options during market downturns. During the financial crisis of 2008, many savvy traders employed similar tactics. They saw the signs of economic trouble and used put options to hedge their portfolios. By doing so, they not only protected their investments, but also made significant profits when the market fell. In more recent times, during the market corrections in 2022, when fears of inflation and interest rate hikes were causing instability, traders who anticipated these movements used put options to their advantage. By predicting which sectors would be most affected, such as tech and growth stocks, they were able to strategically buy put options and profit from the declines. The beauty of put options lies in their flexibility. Unlike simply selling stocks to avoid losses, put options give you the right to sell at a predetermined price. This can be particularly useful when markets are erratic. You have a safety net that allows you to manage risk more effectively. There's also a psychological edge. When markets are falling, emotions run high. Fear and panic can lead to hasty decisions that result in heavy losses. Put options provide a sense of control and security. Knowing you have a plan in place can help you stay calm and make rational decisions, even in the face of market chaos. Strategy implementation. Implementing a strategy with put options involves several steps. First, you need to identify potential market risks or downturns. This requires staying informed about economic indicators, geopolitical events, and industry-specific news. Next, you need to choose the right stocks or sectors that you believe will decline. Then, you purchase put options with strike prices and expiration dates that align with your predictions. Risk management. Of course, like any trading strategy, using put options isn't without risks. You need to consider the cost of the options, known as the premium. This is the price you pay for the option itself, and it can vary based on market conditions and the volatility of the underlying stock. If the market doesn't move as you expected, the options could expire worthless, resulting in a loss of the premium paid. For Alex, the outcome was a substantial profit. While the airline industry struggled and many investors faced significant losses, Alex's foresight and strategic use of put options allowed him to come out ahead. His success story is a testament to the power of understanding market dynamics and using available tools to navigate them. So, the next time you hear about a market downturn, remember Alex's story. The stock market is full of opportunities, even in the most challenging times. Put options can be a valuable part of your investment toolkit, helping you protect your portfolio and potentially profit from declines. It's not just about weathering the storm, it's about learning how to thrive in it. Thank you for watching. If you found this video helpful, please like, comment, and subscribe for more insights into the world of personal finance and smart investing strategies. See you in the next video.